News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest on the war with Iran. The U.S. is preparing for unprecedented economic isolation measures against Tehran. Treasury Secretary Scott Bessent says it's part of the Trump administration's effort to squeeze the regime's finances.
The kinetic war ended after several weeks, and we went from epic fury to economic fury. And at the president's orders, we have raised the level even again. And watch this space for more announcements coming next week, because we are going to apply measures like have never been seen in the history of economic isolation on a country.
And Treasury Secretary Scott Bessent told Newsmax the economic pressure will be part of a 1-2 punch that includes the continued blockade of Iran's ports. The Iranian economy has taken a major hit. Industrial capacity is damaged, and crude oil exports have been severely curtailed by the blockade.
Well, oil rose, Nathan, after the U.S. threatened to impose the economic measures against Iran. And checking prices now, NYMEX crude oil is up 1.5% at $82.49 a barrel. Brent is up 1% at $87.92. Francisco Blanche, head of commodity research at Bank of America, says dwindling inventories are a concern.
Last 6 months, right, we've had this massive negative supply shock in oil. And many people are surprised that it hasn't created a collapse in economic activity. But part of the reason is we have very high inventories. We've lost about 12 to 1,300 million barrels of oil as a result of the Iran war. About two-thirds of that gap has been met via inventories, which means GDP growth has only come down maybe 30, 40 basis points globally, as opposed to 1, 2, 3%. So we can play that game for a little longer, but we're getting close to the end of the rope.
And Bank of America's Francisco Blanche's comments come as Bloomberg reports super tankers are going dark for longer to get oil through the Strait of Hormuz and the Bab el-Mandeb Strait, doubling down on tactics honed in the early days of the Iran war.
And staying with geopolitics, Karen, the Trump administration is now imposing tariffs of up to 100% on imported drones and drone components as it seeks to reduce reliance on foreign suppliers. Smaller drones will face a 25% duty, while even lower rates will apply to some trading partners, including the European Union, Japan, and the UK. The move risks accelerating a decoupling with China. It is the world's biggest drone maker, and U.S. drone exports from China have been cut in half in the first half of this year.
Well, let's turn to bonds now, Nathan. There was a decent demand from buyers as the U.S. sold 30-year government debt yesterday, but the Treasury had to offer a yield above 5.2% to sell $25 billion of bonds. That's the highest rate since 2001. Bloomberg Intelligence's chief U.S. interest rate strategist, Ira Jersey, says years of elevated inflation and deficit-fueled spending add to the strain on government finances.
The U.S. Treasury now is competing with other countries worldwide, whereas for the better part of 2 decades, we were the highest yielding developed market, liquid bond market in the world. That's just not the case anymore. There is competition.
And Ira Jersey with Bloomberg Intelligence says concerns over paying down government debt will grow as debt to GDP rises. The U.S. spent close to $1.2 trillion on debt interest so far this fiscal year, up 15% from a year ago.
And Karen, global stocks are headed for a third straight weekly gain amid optimism over the AI trade and cooling inflation, bolstering bets the Fed won't have to raise interest rates. But some officials are raising the alarm about sticky inflation. Cleveland Fed President Beth Hammack, one of the 3 dissenters at last month's meeting, doesn't have confidence that recent signs of an inflation slowdown will continue.
We've gotten 2 recent reports on the inflation side that are definitely better than the earlier 5 months that we've had this year. And so it's welcome. I love to see that those numbers are coming in lower. That's a good thing. But I don't have confidence that we're going to continue to see that, or that we're going to see them low enough that it's going to bring us back down to that 2% number.
At an event at the Dayton Area Chamber of Commerce, Cleveland Fed Chief Beth Hammack reiterated her call to raise rates now.
Nathan, there's still disagreement among Fed officials. Richmond Fed President Tom Barkin argued to hold interest rates steady due to signs that inflation is declining. Speaking in South Carolina yesterday, Barkin said elevated inflation is coming from tariff and war shocks, which should pass. He acknowledged the risk that some price pressures could become embedded, forcing officials to tighten policy.
In tech news this morning, Karen, sources tell Bloomberg that OpenAI is on track to generate more than $40 billion in annualized revenue. That would roughly double its its run rate from the end of last year. Bloomberg Markets editor Sam Unstead says the momentum strengthens OpenAI's case for a future Wall Street debut as competition with Anthropic intensifies.
The thing to keep in mind with these two, with OpenAI, Anthropic as well, the pair of them are kind of trading off at the moment and bolstering their own strengths and bolstering up their plans for an IPO later in the year for each company. And both IPOs are expected to be enormous deals. So as they come up to that, I think you're likely to hear much more of this, of how strong those businesses are, how good the revenue run rates are, and then how good the outlooks are as well.
And Bloomberg's Sam Unstead says OpenAI's growth is being driven by AI coding tools, subscriptions, and a small but growing ad business.
And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.